Hello, I'm Martin Smith and this is your UFX Markets Week in Review. Today we'll cover some of the major events of the past week and discuss how they impact the global currency markets. The Canadian dollar declined the most since October 2008 amidst concern that the global economy is dropping back into recession, with a haven rally in the US currency and a lowered outlook on commodity prices. Investors report a general feeling of unease in the market as traders are looking out for advancements on the debt crisis in Greece. This has brought down commodity prices and resulted in increased attractiveness of cash investments. This has pushed up the US dollar and brought down the Canadian dollar. The Canadian dollar ended on September 30th at 105.03 loonie per US dollar, which is down 2.2% on the week, 7.4% on the month, and 9% on the quarter. During the past week, the US dollar weakened for the first time in 4 days on Tuesday against the other major currencies as speculation increased that European leaders will do what is necessary to manage the region's sovereign debt crisis. Despite the euro making some advances against the US dollar last week, the cable experienced its weakest quarter against the US dollar and the Japanese yen in more than a year, as fear increased that European leaders won't be able to contain the region's debt crisis and that Greece may default on its debt. The euro slumped against the US dollar and the Japanese yen rose against all of its 16 major counterparts as the global economy slowed and investors sought a refuge currency. The euro-dollar pair had a mixed week and ended down minus 0.84% and was last trading at 133.84. The euro posted its biggest monthly decline against the Japanese yen in more than a year after data showed German retail sales fell by more than economists forecast and US consumer spending slowed in August. The Japanese yen advanced 1.3% to 103.12 per euro, set for a 7% advance. In commodities, oil experienced the largest quarterly drop since the 2008 financial crisis by descending to a one-year low on signs of slowing growth in China, the US and Germany, increased fears that demand for fuels will weaken. This week, crude oil declined minus 0.81% and closed at $79.20 a barrel. Well, that's all we have time for this week. I hope you enjoyed our weekly review and you'll join us next week. Until then, good luck and happy trading. And be sure to visit us at UFX Markets for all your online trading needs.